I want to talk about a trade that I made today, and I wanted to walk you through my thought process when it comes to when to buy and when to sell. I know I've done videos in the past on the right time to buy and the right time to sell. Wow, that was some crazy lightning and big thunder. Doing a video. I know I've done videos in the past on the right time to buy and the right time to sell. But I wanted to walk you through an actual position that I took today. I bought Beyond Meat shares. Maybe I should come a little closer. I bought shares in Beyond Meat today, and I bought it at $153. Now at the open, it had gone up $9 right at the open. It's impossible to get in on that kind of surge. It happens kind of pre-market. The orders are already in. It's already up $9 at 9:30 in the morning. And one bank came out and they said that they're raising it to overweight. Overweight is stock market slang for basically think of it as like fat and happy. If you're fat and happy, you're doing all right. And they kind of raised Beyond Meat to what they call overweight or a buy. I thought, hey, if I can get $2 or $3 out of this stock, and I buy 100 shares, I can make $200 or $300 in a few minutes. I didn't expect it to be a long-term hold. That's all I did this morning. I didn't get coffee, I didn't have breakfast, I didn't do anything. I literally sat at the screen and watched. And when I bought it at 153, it started moving a little higher. It moved to 154, 155, 156. Now, I bought 100 shares. I don't usually buy in 100 share blocks of stocks that are that expensive because it's a $15,000 investment. And the way I see it is, I would rather take $15,000 and divide it into 3 companies or even 2 companies. Buying 100 shares of, and you don't have to buy 100 shares. You could easily buy 50. But I was kind of testing this new theory. I've been, not a new theory, but new for me is noticing these $100 stocks have lately been having multi-dollar increases over the course of the day, right? They go up $4 or $5, they go up $9. And hey, if you bought 100 shares and it goes up $9 from when you bought it to when you sold it, you've made $900. I wasn't expecting that much. At least get $2 or $3 more out of this before it levels off and then tanks. I'll make $200 or $300. It went up from 153 to 54 to 55 to 56 to 57. It even hit 158. But the chart was indicating that it was pushing higher. In my mind, I had a goal target price of 160. No, it doesn't have to get to 160. In other words, I'm not strict. If it gets to 159, I'll sell it. I'll make $500, $600, even if it's falling a little short of my goal, I don't really care. When I started my day off, I didn't have $500 in profit, or $600 or $700. So anything more than where I started is good. But what I noticed was, after it hit 158, it dropped. And the volume started to slow down. And at that point, I started to get a little nervous because it dropped really quickly and then it didn't recover. In other words, its momentum for the day had run out. Momentum investing is trying to buy high and sell higher. It was already up 8%. Could it get to 10%? Could it get to 11% before, it's gravity, right? You gotta look at stocks like gravity. What goes up must come down. In the moment I was watching it and I was thinking, you know what? I better lock in my profit here because a volatile stock like Beyond Meat, it was $220 or $250 a few weeks ago, and now it was as low as 140s. Now it's 150 again, 155, it's pushing a little higher. Anyone who bought it in the recent sell-off is trying to maybe take a quick profit. When I'm tying up that much money, $15,000 in one day, I don't want to hold it. But then I thought, I better lock in some profit. I'd rather have some profit than no profit. It was up $2. That's equivalent to about $200. Yeah, I missed out. I wasn't able to sell it at 158 or 157 or 156, but I did sell it at around 155. Bought it at 153, sold it at 155. That's $2, 100 shares times 2, $200. Wasn't a great day, and what I learned from that is you have to be super quick, first of all, and you have to be really fast on pulling that trigger when it starts to drop, because the last thing you want is to buy a stock that's that expensive and ties up that much money and then hold it on the hope that it's going to go higher. If you're going to tie up that much money, you got to get in, you got to get out, and if you end up breaking even or losing a very small amount, it's better that way to just recover as much profit or capital as you can. So that's the video. Please like, please subscribe, and have a good night. Thanks.